All right, ladies and gentlemen, I hope you had a wonderful day. It was a lot chiller of a day in the market today. The Trump rumor, we woke up to it and he did not deny it. So the dollar stayed down. The PPI actually came in cooler, so that was good, but it did cast some doubts on the PCE. And now tomorrow morning, 1 hour before the bell, we are going to be getting the CPI, and I am telling you, no matter what happens, it is going to surprise everybody. Why do I say that? Because the expectations for inflation right now are pretty high. Even coming into tomorrow, the month over month, it's expected to be about 0.3, 0.4. You rarely see month over month prints like that. The only other time you saw that, inflation started really going crazy. So if the number does come in line, that'll kind of be a shocker because that means it'll be really hot. And now if the number comes in low, everyone's going to be worried about inflation and be surprised that it did not materialize. So I got the breakdown for you. We're going to go over that, what to expect, look at the data. I'm even going to give you my expectation, and then we're going to talk about the rest of the week, go over the plays. I actually made a play today, and then before you know it, man, get ready for the inauguration in the first 100 days. So I got all that, Chad. What I need from you, a thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will see you there in the morning, baby. Run it.
Working to the couch, it's a 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel like it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but the sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
Right off the bat, before we get into the CPI, I want to start with a couple of pretty pictures to also highlight why tomorrow is important. Do not forget, the dollar is extremely strong. The bonds are at a level where last time we went through an inflation scare and repricing, we saw a lot of volatility. That still remains. And looking at where the bonds were at today, if we do get a surprising print tomorrow, and if it's bad, we could see a lot of movement. So this first chart I'm showing you could kind of give you an idea of both sides. This purple line is the economic surprise index, and then this orange line, that is the dollar. And what do you notice? The dollar has been going crazy. There has been a couple of economic surprises. Again, the data has been getting good. That has been feeding this idea that inflation is on the rise alongside Donald Trump, but the dollar has been going crazy. So think about this for tomorrow. If we do get a surprising print, then you'll see this gap close. But if tomorrow things kind of chill out and you don't get that, then this will be a base case for the dollar to chill out a little bit until we start getting more reality. So I thought that was a very good chart. And now this other one, I saw this and I had to show you right away because I've been telling you this for a while. Again, the dollar is very important and the bonds. I hope you have been paying attention, but this is something we brought up on stream a couple of times. And guess what? Bank earnings are tomorrow with JP Morgan. The week after that and the week after that, you're going to really start seeing earnings kick off. And what this chart is showing you, the blue line, that is the dollar year over year change. And in this little gold color, this is the amount of mentions of Forex headwinds or related terms on the earnings transcript. So we've been telling you, as you get into earnings, for now, people have kind of been liking the dollar, but eventually some of these earnings, a lot of these multinational corporations, you're going to start hearing them complain about the dollar, and that's going to turn into its own little headwind and narrative. So here is a chart to give you a visual of that. So like I'm saying, tomorrow we got big data, but don't forget that bond dollar dynamic, that is like the underlying engine that is really driving things. So watch out for that. And now getting into the CPI and the keys, let me explain this very simply for you tomorrow. If we get a high number or a hot number, they both mean the same thing, that is going to lead to a bad reaction in the market. Why do I think that? Because that'll probably shoot the bonds to a new level. TLT will probably hit another low. The dollar will strengthen again. And now you're really going to get people worried and confirmed on this idea of the reflation. I showed you guys that yesterday, so I'm not going to go back to the 70s and show you again, even though I really want to, but understand, hot number It makes sense because what it'll do to the bonds and dollar and the overall inflation narrative, that will not be a good thing. If we get a low or a cool number and inflation does not rise as much as people are expecting or even a lot lower, that will generally be a good reaction. It could take some pressure off of the dollar and bonds, and that wouldn't really be too much of a negative surprise. And again, I think the market will like it, and it will buy you some time into the inauguration. So we're going to talk about that here in a second, but what I want you to see now is the estimates for tomorrow and understand why I'm telling you both elements could be pretty surprising for the market. And why do I say that? It is because all of the estimates are very high right now. So if people find out the data does not prove any inflation, it'll be a sigh of relief, but that would be a surprise. And then if you actually hit this hot number, that'll be pretty surprising, and anything past that, I think it'll really freak people out. So my expectation for tomorrow, I think we're going to be in line, maybe higher, just because, again, a lot of the data has been heating up, but not as much as people have been worried about. But the number is so high, a 0.4 headline, even a 0.3 core, like hitting a 0.4 core, that's only happened a couple of times. So I don't know we're going to get that. And I talked about it today, like even though a lot of the data leans towards the hotter side with how everything is played out since the election, there is still a chance that it comes down because everybody is expecting a lot. And here's what I said today. The downside is easy to see the response tomorrow. If inflation is hot, I think there will be more downside than upside. If the inflation cools down, I don't think that's going to mean coast clear. So if you get slightly below inline CPI tomorrow, I don't think that's going to make you rip up and then the bonds and now we don't have a problem. I think that will just buy you some time into the inauguration and chill things out until we deal with the next set of headlines or things that are actually affecting the economy. So I hope that makes sense. This is my expectation. And like I'm saying, just to show you the chart here, the expectation is 0.3, 0.4 for tomorrow on the headline. Core is around 0.2 to 0.3. But like I'm saying, you start to pull out these charts. Oh, that is the year over year, but like go to the month over month again, 0.3, 0.4, that happened only like twice at the beginning of the year, and the beginnings of the year and ends of the year are kind of hotter seasonally. But like I'm saying, start pulling this chart out. And remember, when people were really freaking out about inflation, right now inflation expectations are acting like it's 21, 22, but bro, you were getting 0.7, 0.9, 0.9, 0.7, like it was a really completely different inflation story. So again, the last time you even went above 0.4 was August of 2023. So like I'm saying, the estimate is high. And if that comes in even higher and you start to break, 1-2 year trends and get past anything 0.5, now you're really back to the early days of inflation. That will absolutely freak out the bonds and freak out a lot of people. But now to the other side of that, if this comes in at 0.3, 0.2, you just start to look like how you have been. And if anything, you could kind of see the chart fading if we turn this into a line chart. You kind of see the downtrend minus that little quick uptick. So we're going to see how this all plays out tomorrow, but the whole idea is everybody is expecting a hot number. The expectations are high, and I think people are going to get surprised by that in some sense of the word. But how are you going to respond and interpret it? Bonds in dollar confirming inflation narrative. That's all you're going to have to really look at. Again, the downside, I think that could open up more levels leading into the inauguration, which could make it a little bit more worrisome. But even to the upside, I think maybe you hit the high of the year, best case scenario. Other than that, it's just going to calm you down until we get those first 100 days. So I hope that helps. I hope you guys are ready for all of it. But that is just the CPI. And remember, we are going to be live 1 hour before the bell. Did I tell you youtube.com/the stock market? Again, we'll be live there. I'll see you there. But now the final key, Japan and China are next. So obviously that inauguration and first 100 days, we have been talking about it a lot, but think about it. After we get this CPI to finish the week, we're going to see what happens with the bonds and dollar. You're going to get the kickoff of bank earnings. That'll add a couple of things. And then Japan, you're going to get comments leading into the Bank of Japan, a little bit of data. And then by the end of the week, China's going to have one of these economic events, and we'll see what they say about stimulus. They brought it up earlier. I think they're just going to wait for Trump. I think Trump is going to wait till he gets in office to really make it clear what he's doing with China. And once China knows what's up, they're going to go from there to either respond, either negotiating or even with stimulus. But for the end of the week, once we get over this CPI, it'll cause a reaction. Then you're going to spend 7 hours a day watching those morning headlines. But again, Japan, China, we'll get some events there. Maybe hear from the UK, but that dollar bonds thing, once again, we're going to find our answer into Trump. So other than that, I will see you in the morning. I hope you're ready for it. The SPY futures are pricing in 1.1 for tomorrow, so it is a surprisingly large reaction. So I think it's going to be a good one. I will see you there, but now let us get into the plays. So right off the bat, I have a couple of different ones, and given the fact that we are having CPI tomorrow, I think this is more than relevant. I told you at the beginning of the week, we even brought it up a little bit earlier, but it's very simple, man. Oil and materials, this is more relevant than ever. Right now, inflation expectations are higher than actually inflation is going up, but the more and more we get confirmation, if we get a hot print tomorrow and things start playing like that, all of the commodities in oil are going to run. Even oil to start off the year, it's up 10%. I was saying that last quarter, oil has barely moved. So if people are getting worried about inflation last 3 months, I'm not buying it. But in the last 2 weeks of January here, oil has gone up 10%. Now that's going to start being more reminiscent of inflation. Commodities go up, lumber, and just don't forget what you went through. Do not memory hole your last inflation experience. That's why I'm like, it's interesting that people are worried about inflation, and maybe it's because of the scarring of last time. But if you really look at the trend over the last couple of months, it's not like things are ticking up rapidly compared to people's ideas and worries and mainly expectations. So either way, if we start getting hotter or cooler inflation, tie this into tomorrow with the CPI, oil and materials, this should definitely be on your radar. So watch out for that. That is play number one. Then play number two, man, WYNN. I'm telling you, this one has been calling my name. I even brought it up end of last year. I ended up not making a play, but why do I like this? Because it has both China and American exposure, American casinos and their American business, but most of their revenue comes from Macau. And if you go and look at this stock since Trump won, it's super weird. Why? Because right when Trump won, think about their China exposure, they actually gapped down while the SPY ran up. Then the SPY started coming down, then they went up, and then all of a sudden it went from inverse to they kind of matched up. And then they started doing exactly the same thing. And now we're going to get into the inauguration. So once we get those answers on China, first 100 days, this is definitely going to be a name I'm going to be eyeing. So watch out for that. I don't have any plays on it, but it's definitely on my radar, both short-term and long-term. So keep your eye out for that. And then finally, play number 3, Tesla. So Gary Gensler, final Hail Mary before leaving next week, man. You can't believe it's crazy. They're suing Elon Musk. The SEC is suing Elon Musk for like securities fraud or something like that. You could go check it out on Twitter. Follow me, Real Cold News on Twitter. But the whole point is, I wonder if this is going to affect Tesla, and that's going to kind of be like a little sidebar, and we'll see how that plays out tomorrow. But then again, this is going to be a little volatility event maybe with that news. It's already came down, but just don't forget those Trump trades, election, first 100 days. You might hear something about EV, automation, and all of that. I'm going to start eyeing Tesla and keeping an eye on that. So we'll see where it takes us tomorrow. Other than that, I did make a play today. I know. I only made one play last week with the EL, and now today. I didn't just hold cash. I did. Oh, I forgot to add it. Oh, yeah. Here, I did another one. I did NVO in the long term. I added 40 shares on the big account. I think it was at like 80.26, and then I got 4 shares on the YouTube account, and then Colt's sister got 3. So NVO, this is the maker of Ozempic. It's foreign. It's actually up on the multi-year. It's down like 30, 40%, 49% from the high, 30-something in just the last like month. I've always talked about how I like it. I think it's a high-quality name, so I went with it, man. For the long term, I thought I was going to hold my cash longer, but it went down another 5%. I still think NVO could go lower, but definitely a good place to start, considering how much I've talked about Ozempic and all of it since all of it happened, man. So I'm very glad that I own it now. It's kind of exciting. So NVO, that was to the long term. And then for options, I made a play on the Japanese yen. Now, I went with options. Why? Because I only wanted to put $150 because it's kind of speculative, this idea that I have. I'm kind of playing an earnings run-up, but for the Bank of Japan. And in the sense, look at where the market is. I think if we get crazy volatility the 100 days, I think smaller plays you could get lucky, and you don't really want to be in the point where if a bond blows out, I've already gone through that, still going through that, but then if like a yen or anything, I don't want to be exposed too much dollar for dollar, where I think the risk to reward, if you kind of get a surpriser at one of these events, the upside is way better than any downside, and then if there is any downside, you could just recoup and go from there with only a $150 loss. So that's why I did this. I grabbed a FXY March 65 call and 10 of them at 15 cents, $150. And why? We heard from a couple of Bank of Japan people today. Over the next couple of days, you're going to hear from them and get a couple of data sets. Then you have the Bank of Japan next week, and some people are saying they're going to raise rates. I think they might do it again, and that could have a big effect on the yen. But even then, you've watched this many times leading into the Bank of Japan, especially when the yen is weak. You're going to start getting Nikkei rumors and all of that, and then it'll probably drive some volatility. Idea is buy it now, get a volatility pop, sell out before the meeting. That's what I'm going to plan to do. The next pop, I'll make it free, and then we ride it out. So we'll see where that takes us, but that's the only other play that I made, and then we'll see after the CPI if we get some reactions, but other than that, Chad, all about the data, the dollar, the bonds, and welcome to 2025. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, you can notice things in other people, but what can you not notice about yourself that anybody who lives with you would notice? Oh, the mirror, my brother. You tell me. I think about it. I don't know, but get a good night's sleep. Don't let that ruin your sleep. Drink that water. Stay hydrated, healthy, all that good stuff, baby. I'll see you in the morning, and oh, not.